It was a fairly quiet session with US markets and UK markets out of action for holidays. And it really looks like we'll have a fairly lackluster session at the open here today. Of course, European markets managed to gain some ground, but that was mainly as a result of the bounce back we saw in US trade on Saturday. Basically, it was just a little bit of bargain hunting in European equities. They experienced a sharp sell-off last week, and that really did help lift sentiment a little bit. But we really have to look at the moves in the currency space, where most of the major currencies were relatively flat. We saw that the dollar yen remained quite stable around 101. At least it halted its slide after a very volatile session yesterday. It's had some pretty big impact on the Nikkei over the past few sessions, and we've seen some fairly wide trading ranges for Japanese markets. At the same time, the Aussie dollar is quite flat as well at around 96.35. It does look like the balance of factors is still quite negative for the local currency, especially ahead of next week's RBA rate decision. A lot of investors are very skeptical about the local domestic economy at the moment, and with the likes of David Jones and Meyer continuing to miss sales targets, it really does look like we're in a period of underperformance for most of the cyclical names. Following the leads from the European trade and the lack of leads, I suppose, from US and UK trade, we are looking at a slightly lower open for the local market, down about 0.4% at about 49.46. Now, we did see a pretty strong recovery by the market yesterday after having printed an intraday low of 49.31, managed to close around 49.59. So it just looks like we might be giving up some of that ground from yesterday. Of course, that 49.31 level will be in focus in the short term. We'll also probably see the market trade down towards that 4,900 mark, which is where a significant consolidation might actually take place. This level is responsible for the reversal higher back towards that 5,200 level. So this might be the level a lot of investors will be looking at to start accumulating stocks again. It seems a lot of the buyers are on the sidelines at the moment, very skeptical about the market, particularly with Japan continuing to exhibit signs of weakness. Currently, Japanese markets are looking at opening below that 40,000 mark, which is key near-term support. So this might rattle local investors once again. I think some of the stocks that look vulnerable at the moment are the likes of News Corp, ResMed and Flight Centre. These have been some of the outperformers this year, and of course that's where a lot of investors will be looking to take profits heading into the end of the financial year. Apart from that, I think it'll be a relatively weak session across some of the resource names as well. Of course, most of the metals were closed along with the London Metals Exchange, so that will limit the leads on that front. But we did see iron ore prices drop over 1%, just hanging around that $120 a ton mark. So that should make it quite an interesting session. Of course, unfortunately, we don't have an ADR for BHP today, but it does look like it might trade a bit lower at the open.